In this video, I'll be showing you how to identify the high probability CRT setups. In my previous video, I made a video on my take around the CRT, which if you don't know is a candle range theory, which basically means that you use higher time frame candle as your lower time frame trading range. I got a lot of questions on how to identify the high probability ones, and that is exactly what I'm going to be showing you in this video. I understand that a lot of people are very interested in this concept, especially turtle soup traders. I myself am a person who have traded the turtle soup for a very long time, and I understand how to pick apart the good ones from the bad ones. So without further ado, let's jump onto the charts and let me show you a few examples. Now, if you have yet to watch the other video, I highly suggest that you go ahead and watch that first so that you understand exactly what CRT is. But taking a look at my screen as of right now, you're able to see the high probability CRT scenario 1. Okay, this right here is my absolute favorite scenario of all time. Also something that I've used a very, very long time prior to knowing what CRT is. And basically, this right here is my favorite turtle soup setup, and we have to think about this from a higher time frame perspective. So let's go ahead and say that this is an hourly chart. So all these candles are 1 hour worth of price action. Now with this candle right here, you can see that we duck into a imbalance or a fair value gap, but price failed to fill that entire imbalance and just made a low inside of the higher time frame imbalance. Now this candle right here is something that I would use every single time as a turtle soup or a CRT. So what do I mean by this? Well, if we made a low inside of a higher time frame gap that failed to fill the entire imbalance, that low is likely going to be turtle soup. So that would mean that this low is the CRT low and this candle is the CRT candle that we're looking for. So the trading range I am expecting to happen inside of this hourly imbalance, right? So if I draw the high out, all that happens within here is the trading range. This is the trading range low. This is the trading range high. When we break the low, I'm anticipating that that low is only breaking the prior low to fill the imbalance that this one failed to fill. So as you can see, this low here failed to fill the entire imbalance. So we made a new low that filled the entire imbalance before moving higher. And this right here is my absolute favorite turtle soup play of all time. And also obviously a great way to identify a high probability CRT candle, because obviously we don't just want to use any higher time frame candle as our trading range, but these ones are the best ones if you ask me. The higher time frame candles that have hit a higher time frame imbalance but failed to fill them and simply made a low within them. Now, it's important that you wait for the new candle to open and then sweep the low. So what you don't want to do is go to a 1 minute time frame here, and then when this hourly candle comes down and breaks its prior low, it's no longer valid. Okay, it must be a new candle that comes down and sweep a low that we made that failed to fill an imbalance. And that right there is again the highest probability turtle soup play that you could ever find. Now here we have the high probability CRT play scenario #2, right? So almost the same thing, except price failed to, make a low inside the gap. But what it did instead is make a low right before a higher time frame imbalance, right? So this whole candle here I will use as CRT, and this will be the range low and this will be the range high of the lower time frame trading range. And I'm wanting to turtle soup the low because I'm anticipating that price wants to sweep liquidity here, hit this imbalance, and then go higher. So of course I gotta include a little bit of this imbalance inside of my stop loss, because I am anticipating this low to be turtle soup only because there is a higher time frame imbalance resting right below. So again, a very high probability turtle soup play and a very high probability CRT candle. Now here we have high probability CRT play scenario #3. Okay, a little bit less talked about, something I discovered on my own. I'm not sure if anyone else teaches this. What we are essentially looking for is some sort of key liquidity level to the left of us. So either that will be higher time frame equal highs, whatever it might be, some sort of liquidity level that you think price will react off of. Once a higher time frame candle comes up and sweeps that level of liquidity, the key level, right? We don't turtle soup the initial hit. We wait for price to sweep the high that swept the original high. So this right here is our original high, right? That this candle comes up, sweeps that key level of liquidity, pulls down, opens a new candle. That new candle comes up and sweeps the prior high and then comes down and goes lower. So this is when I will be taking my turtle soup entry, not here. And that again is a great way to identify higher probability CRT candles, with this candle right here obviously being the CRT candle. And after we swept the highs of a CRT candle, I am anticipating the low to be the next target, the low of the CRT. Obviously, that's the same thing. If we sweep the low, I'm expecting the high to be the next target. And then some people might say, oh, well, that's not a lot of price action, right? That what is that? Maybe 50 ticks? Yeah, but what you have to understand is that we often enter these on a 1 minute chart, meaning that we have a tight stop loss, right? Because if this is truly a turtle soup trade, then price shouldn't really go far above the high. We should really hit it and then react immediately. So that allows us to keep our stop loss tight. And on a 1 minute chart, this right here is quite a lot of price action. So with that being said, let me show you some examples of a live chart and not just examples that I've drawn out. This right here is a perfect example of my strategy, and it showcases two of the high probability scenarios that I just told you about. So this is on a 1 hour chart. And as you can see, we have a higher time frame imbalance, which is that hourly imbalance right there. Now, what do we have right before that? Well, we have a pretty obvious swing high, right? So that right there could have been the first turtle soup entry. We include the first part of the imbalance, but we enter off of the high. So this right here is what it would have looked like, because we have a high right before an imbalance, right? So price comes up, sweeps the high, hits the imbalance, rallies down lower to sweep the sell side liquidity down here. Now, what else do we now see? Well, we see that we have made a high inside of an imbalance that failed to fill the imbalance, right? This high obviously failed to fill this entire imbalance. So that right there is again another very high probability turtle soup. Now, what will I do? Well, I simply will enter off of the high. I make sure to include a little bit of this imbalance into my stop, preferably when you have an imbalance right above your entry. I, most of the time, tell people that they have to place their stop above the conscious encroachment of that imbalance. Now, while it's not a must, it's often very, very nice. So we're going to target the opposing sell side liquidity, and we're going to put our stop just a tiny bit above the conscious encroachment of this larger imbalance. And let me show you exactly what happens. And there you go. As you can see, we had the high that failed to fill this imbalance, right? Price came up, made a new high that filled this imbalance, tapped this imbalance, and then rallied lower down to the sell side liquidity once again. So again, do we see what I'm saying here? We have the first setup, which would be this high here, because it is a high made right before an hourly imbalance. So that in itself is a great turtle soup. Then the high that takes out that high now made a high inside of an imbalance and failed to fill that imbalance. So I can expect the next high that we make to sweep this high, fill the imbalance, and then rally down lower. And that is exactly why this right here is such a high probability turtle soup play. Now, is this CRT? No, it's not really CRT, because as you can see, right, this right here was supposed to function as a range, which obviously did not really, because price rallied down and then kept rallying lower. So none of these examples are a CRT per se, but they are just extremely high probability turtle soup plays. But let me showcase some actual CRT plays for those interested. Now, right here is again a perfect example of a CRT. Now, this is very, very simple. We have a low that formed an imbalance, right? So I will mark out that low as the CRT low, and I will mark out the high as the CRT high. Now I have gone to a 2 minute time frame. This is the low of that hourly candle. This is the high of that hourly candle. And what we notice happen in between the high and the low is a consolidation forming, right? Now, again, this is my take on the CRT. It's simply just a power of 3, because again, we have the accumulation, and the low and the high of that is the 1 hour high and low. Our entry will be this low, stop goes a little bit below there, and then target the hourly high for our take profit. We play it out, and there you go. Exactly, right? So again, we have a very, very beautiful, beautiful example. We have a low here that's an hourly candle low. We have a high here that's an hourly candle high, right? This low formed an hourly imbalance. That means right below this low is resting an hourly imbalance. That, coupled with a consolidation in between the high and the low, just forms the most perfect AMD scenario, right? Because we have the accumulation, we have the little manipulation down here, and then we have the distribution to take out the hourly candle high. Now, that is essentially what the CRT is, right? Now, that was nothing crazy, not a crazy example, simply just using the candle that formed an hourly imbalance, using the low to send us to the high, right? That's one of the CRTs that I really enjoy using. So again, nothing crazy. We see it all the time. We take a look right here. We go into replay mode. We have the exact same scenario right here. Now we have a high here. That price is most likely going to sweep. Then we have a candle right here. Now what's resting right below the low? An hourly imbalance. That means that this candle was a candle that formed an imbalance. Now I go to a 2-minute time frame. We have the high of the candle here. We have the low of the candle here. In between that, we have this sort of consolidation going on. So again, I would use the low to send me to the high, right? So, right, let's play it out here and let's see what happens. And as you can see, this one took a little while, but ended up working the exact same way the other one did. So again, the high of the hourly candle, the low of the hourly candle. Now, what's resting right below the low? An hourly imbalance. I use the low to send me to the high. That in itself is exactly what CRT is, right? It's simply just using the hourly candle as a lower time frame range, then using the range low as a turtle soup to send us to the range high. It's overcomplicated for no reason. It really does not get any more simple than this. The other examples I showed you can also be coupled with CRT, right? But obviously, I myself do not really use CRT a whole lot. What I showed you in the first example is exactly what I do when I am on the charts. Now here again, we have the exact same scenario playing out. We have a candle with a high and a low. Now, what's resting right below the low? Well, that's obviously this larger hourly imbalance. So what will I do? I will go to a 2-minute time frame once again, and I will use that hourly candle as my trading range / AMD. Now I can already place my buy limit there and then target the high of the trading range simply because I looked at the hourly candle. And there we go. We're now inside the trade and let's see what happens. And as you can see, it worked out perfectly. Price used the hourly candle low as a manipulation move, and then it had the distribution move up to the hourly candle high. And that right there is, again, the CRT. So that right there is exactly what I do if I utilize the CRT. But the first example that I gave you is exactly what I want you to focus on. Don't worry about candle range theories. Don't worry about all this stuff that you see on social media. The plays that I showed you in the beginning is exactly what I do on a daily basis. So please, the first few examples that I gave you, go ahead and backtest it, okay? Try it out and let me know what you think. The CRT is one thing. In my opinion, again, it's a repackaged power of 3 or a open high, low close, whatever you want to call it. It's nothing crazy. It's simply just using the higher time frame candles as a trading range. But in reality, that's exactly what a trading range usually is. If you're on a 1-minute time frame, and you have a consolidation, well, chances are the high of that consolidation and the low of that consolidation is an hourly candle. Does it really matter? Not really. So thank you all for watching, and I will see you in the very next video.